It wasn't signed in Washington. It wasn't even announced. But the moment Crown Prince Mohammed bin Salman inked that $600 billion oil deal with China, it was personal. A quiet revenge, a silent strike. For years, the US dictated Saudi oil strategy. In 2026, Riyadh responded with an economic weapon so precise, it didn't need missiles. It needed math. And now, American dominance is collapsing in real time. On January 17, 2026, a flash report from the Energy Intelligence Unit landed on the US Secretary of State's desk. Its headline, Saudi Aramco Sinopec, Strategic Realignment, UN-denominated supply chain, deal reached. The 56-page document detailed a sweeping oil for infrastructure pact. The partners? Saudi Aramco Sinopec, China, Petrobras, Brazil, Rosneft, Russia. But here's the dagger. All trade would be conducted in a non-dollar BRICS basket, anchored by the digital yuan and new gold-backed BRIC bond system. An anonymous analyst inside the US Treasury described it bluntly. This isn't just diversification. This is a coordinated energy divorce from the West. What happens when the dollar is no longer the default for oil? Hint. Every US sanction, every oil-backed loan, every Middle East policy starts to wobble Saudi Arabia's Crown Prince Mohammed bin Salman signed off on a $600 billion, 10-year multi-country oil and infrastructure pact that does the following. Locks in 48 million barrels per month to BRICS nations, builds joint refineries in Pakistan, Brazil, and South Africa. Transitions trade to a BRICS reserve unit called the BRIC Bond Launchers, a digital oil ledger tracked via blockchain to avoid US audits. The entire deal was unveiled at the 2026 Riyadh Energy Sovereignty Summit, where MBS declared, "We no longer sell energy in dollars. We sell energy in sovereignty." Western diplomats were not invited. Dr. Yasmin Varela, an energy strategist at Global Quant, told GeoWatch Weekly, "The dollar's link to oil was the last major pillar of US financial dominance. Break that link, and the entire petrodollar ecosystem unravels." Within 2 weeks of the announcement, WTI crude spiked to $142 per barrel. US gas prices surged by 70% overnight. Occidental Petroleum and Chevron lost $118 billion in combined market value. US defense officials were caught off guard as OPEC Plus nations halted scheduled meetings with Washington. One White House aide reportedly told a Washington Post journalist, "We assumed they'd never flip." That assumption just cost us our credibility. In Houston, a former oil rig supervisor explained, "We were mid-contract with a Saudi field in Jubail. One day the emails stopped. Next thing I know, they're flying in engineers from Shanghai instead of Oklahoma." In California, long-haul trucker unions protested rising diesel prices, chanting, "No gas, no freight, no future." Is this the start of an energy Cold War, or has the US already lost? Beijing wasted no time. Within 72 hours of the Saudi deal, China launched a satellite-linked oil ledger system to track BRICS flows. Huawei revealed a secure blockchain node array to bypass SWIFT BRICS. Leaders announced plans to host a new energy arbitration court in Dubai. And here's the kicker. Iran joined the deal, quietly, behind the scenes. "This is more than oil," said one Indian diplomat. "It's a restructuring of global power, one barrel at a time." Michael S. Connors, former CIA Energy Division lead. "It's the perfect storm." The Saudis felt disrespected. The Chinese offered certainty. The Americans assumed dominance was permanent. Washington retaliated with new sanctions on non-transparent energy actors, emergency subsidy packages to US refineries, a massive PR campaign, Buy American Energy. But the world wasn't listening. France's Total Energies hinted at joining the BRICBOND system. Japan began testing BRICS to yen conversions. Even Canada started exploratory talks with BRICS plus observers. This isn't just a shift, it's a geo-economic mutiny. If the dollar isn't used to buy oil, what happens to America's trillion-dollar deficit? Spoiler, the answer starts with inflation and ends with irrelevance. Imagine a world where oil is bought in yuan, where infrastructure is funded in BRIC bond, where the IMF is no longer the only game in town. That's not 2030, that's starting now. In private memos leaked from the Federal Reserve, one analyst allegedly warned, "We may be approaching the end of energy dollar hegemony. There's no playbook for what comes next." Has the US just lost the energy war without a single missile fired? Drop your take in the comments. Because this time the battlefield wasn't in the Middle East, it was in a spreadsheet signed in Riyadh.